Why do I like microcap stocks? Is it because they're the best investments? Is it because they can make you millions very quickly? This is exactly what we're going to cover in this video. If you're new to this channel, my name is Mariusz Konieczny. I run Microcap Explosions, which is a private membership website dedicated for microcap stocks, which are ignored and underfollowed by the investment industry. I also wrote 10 books on investing, one of which is available for a free download at microcapexplosions.com, so make sure you get yourself a copy. Microcap stocks are the best stocks on the planet. They are the easiest to make you a millionaire very fast, and they can multiply your money the easiest. Is that right? No, not at all. So why do I like them? There's only one reason only why I like microcap stocks. And it is because there is very little competition in them. That's it. No other reason. You see, you have really two groups of investors. You have institutional investors and you have retail investors. There's no other investors. Yes, there is computers buying stocks, but they're really run either by institutions or retail. On the institutional side, you have mutual funds, insurance companies, hedge funds, just name it. On the other side, you obviously have retail investors, and we all know what that means. If we think about institutions, what kind of things do they invest in? Well, first of all, let's think about what institutions do and what kind of business they're in. Institutions are in the business of acquiring assets under management. And they make money, a small percentage, based on the assets that they manage. If they manage $100 million and they charge 1%, they make $1 million for managing those assets. And hedge funds can have a structure where they charge 2 and 20 or whatever other structure they want to choose. In other words, they might charge 2% on the assets under management, and the 20 is 20% of the profits that they generate. But they are in the business of acquiring assets, which means they go for size. When you manage hundreds of millions or billions of dollars, you have to look for places that are big to accommodate that size. They cannot go and look to invest in $10 million market cap companies, $100 million market cap companies. They can't do that. They have to go after the big names simply because they have so many clients, so much assets under management. They have to fit this huge size into big companies. That's why they play the game in the big names, and that's why they are not in the small cap world. So institutions are out. And it's not that there aren't any institutions in the microcap space or small cap space. There are, but there is very few of them. And when they are in that space, they have to own like 100 names to fill up the entire size of their fund. In general, they're out of the game. They're not in there. That's why there is very little analyst coverage on microcap stocks, because there's no audience. There's no institutional audience. Now let's think about the other side. Retail guys. Are retail guys invested in microcap stocks? Retail guys don't even know the microcap space exists. They have no idea. So many times I will do an interview somewhere where the person that's interviewing me is an investor, and that person has never heard that the microcap space even exists. So if that person who is an investor doesn't know the microcap space exists, how are the retail guys gonna know? They have never heard of it. They are busy chasing Bitcoin, GameStop, AMC, Tesla. That's where they are. They're playing in a different universe. So you have institutions that cannot play in that space. You have retail people that, they don't even know it exists. They're playing a different game. As a consequence, you have very, very little competition. That's why I like microcap space, for that reason. But just because there's no competition doesn't mean that the success is guaranteed. You see, microcap space is a space where there is more risk. No question about it. The businesses that are smaller, especially whether they trade on OTC or Canadian Stock Exchange or TSXV or AIM in London, that absolutely, in general, they are riskier companies. But notice the wording that I'm used, in general. You see, even the people that are involved in the microcap space that are considered the competition, most of them, I believe, do it the wrong way because they invest in low quality companies. They invest in stories. They get so excited about fighting a company that has the solution for cancer or this or that, and then the addressable market is this and that, and they're going to change the world, and it's beautiful, and they're going to make you 1,000 times 100x your money. And then you ask, how much are your revenues? We don't have any revenues, but we will. See, this is the problem. They go after the stories, and then they get burned in those names even faster than they get burned on overpriced growth stocks. You see, microcap space is an opportunity to find real companies with real clients, with real solutions. They might not necessarily be profitable yet, but they are on the way to be profitable. A lot of them are profitable, but it's not a requirement. But in my view, what's an absolute requirement is for them to already have revenues. They don't have to be huge revenues, but they have to have revenues, in my opinion, because I have to have a way to be able to tell whether their product or a solution solves somebody else's problem. Everybody can tell you, we have this great product, it's going to change the world, it's going to do this, this, and that, but until there are revenues, nobody has paid for that solution. Nobody has said, here's the money for solving my problem. That's what I want to know. And then when there are revenues, then I can reach out to the customers and I can talk to them and I can find out, why are you buying from this company? What is it that this company is doing that makes you buy from them versus somebody else? This is very important for me because stories are great, but until there's money exchanging hands, it's just a story. And I'm not smart enough to say whether the technology will, solve somebody else's problem. If the revenues are already there, if the revenues are growing, then it already tells me that they have solved somebody else's problem. Now the next question is, will they continue be solving more problems for somebody else? That's a different conversation. But this alone is something that, passes my first test. The other great thing about microcap stocks is that they are illiquid. And for some people, that's a no-no. They don't want to go into a space where the stocks are illiquid. In other words, it's hard to build a position and it's hard to exit a position. In my view, that's fantastic because this keeps my competition away. They're afraid of illiquidity, and I am attracted to illiquidity because illiquidity keeps them away, keeps my competition away. And also, illiquidity creates a lot of volatility. Volatility scares a lot of people and it keeps them away. You see, I don't mind myself taking 2 or 3 weeks to build a position and 2 or 3 weeks exiting position. That's not a problem. Also, it doesn't really bother me to see this huge volatility from one day to another. You might start a day and then the stock will come down 20% or go up 20% just because John from North Carolina decided to buy a huge position or exit a huge position. That doesn't bother me. What's important for me is the underlying business. And this is where I think the investment industry misses the whole point of the microcap space, because they call this space penny stocks, risky, don't touch it, you're going to lose all your money. If you focus on the business, if the business succeeds, if the business grows over time, and you stay with that business, you will not lose money. Now, if you buy a business that has no revenues, it's just a promise, it has crooked management, they really don't have a good solution, they don't have a good product, yeah, you will lose money. For sure, because the business fails. But if the business succeeds, you're going to be okay no matter what. I always use this example of how incredibly misinformed the world is. Because if you have a gas station, let's say, or a local grocery store, and that local grocery store only generates enough money that it's worth $10 million, and your entire life savings are in the grocery store, your entire family depends on the grocery store to pay bills and to raise kids, nobody would have a problem with you having your entire net worth invested in that business, because it's a real business. It's a real grocery store. Nobody would have a problem with this. No financial advisor would tell you it's too risky for you, because that business serves a purpose. It solves problems for the people in the community. It provides groceries for the people in the community. However, if you took that same business and you put it in a publicly traded entity, and you made it trade on OTC, or you made it trade on TSXV or Canadian Stock Exchange, this transition alone would make this business risky. Don't touch it, it's going to make you lose money. You see, how crazy and ridiculous is this? Is the same business in private hands, it's okay to own. In public hands, don't touch it, it's too risky, it's a penny stock, you're going to lose all your money. So this is a great example of misunderstanding. Now, if you have a business that has no revenues, has not a really good product, bad management, it doesn't matter if it's in a private entity or public entity, it's going to fail. If it can't generate revenues, if it can't solve problems for its customers, it's going to fail no matter what entity it is in. Whether the entity is private or public, or whether the entity is this big or that big, it doesn't matter at all. What matters is the quality of the business, whether the business is useful to society, to people, that's what matters. And the size of it or the price of its stock, it doesn't matter. What matters is the business itself. In summary, there's only one reason why I like microcap stocks, and it is because there is very little competition. Institutions cannot play in it. Retail investors are busy chasing Bitcoin, Tesla, GameStop, you name it. They're busy doing this. They don't even know this space exists. The people that are in the space, in the microcap space, they chase stories, beautiful promises, and they don't even focus on the real businesses that can change their lives. So I hope this video opened up your eyes a little bit. What I look for in small businesses, microcap businesses, and I hope that you understand the only reason why you should be involved in microcap stocks. It is not because it's a quick money fix. It's not because they can make you million overnight. It is because there's very little competition, and very little competition gives you a probability of mispricing. That's it.